Srikanth Narayan, founder and CEO of Cash. Your firm recently launched the Index Sync S&P 500 Exchange Fund. What exactly is it and what does it do?
Great. Thanks so much for having me, Chris. To tell you a little bit about indexing, let's peel back the onion and talk about exchange funds first. Exchange funds are a product that help investors with concentrated stock positions diversify without incurring a huge tax bill. They have been around for a very long time, uh, and institutions have offered it since the 1960s. But until we came into the picture, they were traditionally reserved for like very the ultra wealthy. You needed to have high minimums and high fees. You needed to have a private wealth relationship. Uh, the other aspect of these exchange funds that really bothered most investors is that they would never have any capacity. The way an exchange fund works is you get a lot of folks with concentrated stock positions and put them into a fund, and everyone gets exposure to all of the stocks in the fund. And if you're building the exchange fund around, let's say, an index like an S&P 500, you need to find folks in all of the different sectors that the S&P 500 has to be able to create a fund that mimics the S&P 500 as closely as possible. What has happened over the last 20 years is some sectors in the economy have done incredibly well, and other sectors in the economy have not done so well. So you have, let's say, tech stocks that have 10x or 20x or 100x, and you have the NVIDIAs that are probably like 400 or 500x. And you have many sectors like real estate or materials or um, financials as well. A lot of stocks in these sectors haven't moved all that much over the last few years. And when you're trying to build an S&P 500 fund, you need stocks from all of these different sectors, and there are just not many investors that are coming in. That just makes building an exchange fund that much harder and leaves a lot of folks that want this product disappointed. Uh, that is a little bit about the problem. What Index Sync does is it uses an ETF as a core holding within an exchange fund and utilizes the ability of an ETF to rebalance tax efficiently to get wide exposure to all of the different sectors in the economy, and be able to deliver on this S&P 500 return as promised. That is the major structural advantage and a structural innovation that we're bringing to the market. An exchange fund traditionally was just a limited partnership with a lot of folks contributing their stock. With our structure, it is still a lot of folks contributing their stock, but they'll be rebalanced with an ETF that is targeting the S&P 500.
Can you say a little bit more about how you think this product can help investors and what gap in the market it's aiming to fill?
Great. As I mentioned, the biggest gap is that the product is just not available. You hold a Meta or you hold Apple or you hold NVIDIA. If we go to a traditional exchange fund provider, they're likely to not have any capacity, and they haven't had capacity for sometimes 5 years or so. And what this helps us do is provide the capacity to investors that are looking to diversify from their Apple or Microsoft or Amazon and be able to get this broad S&P 500 exposure without backlogging all of the investors that want to get this diversification.
Now, can you say a little bit about what Cash has been having going on lately as a company?
Great. Yeah, the biggest product innovation that we're bringing to market is what we talked about, uh, called indexing. We started off with building NASDAQ 100 focused exchange funds. And on the back of that, over the last 15 months, we have scaled up to close to $500 million in assets. And the next chapter, beginning with S&P 500 focused funds, will take us even beyond.
Thank you very much for your time.
Yeah. Thank you so much, Chris, for having me.